We're still early.
How early? Explain. I mean, to people who say, how can that possibly be true? Now you're starting to see the articles trickle out. Oh, AI might not be that transformative. Oh, talk about why this stock can still have more room to run.
Yeah, you bet. So people get nervous, and I get it. Don't get me wrong. I mean, the stock, and not just stock, but the numbers have run so far so quickly that people do worry about sustainability, and I understand that. But at the same time, you can sort of look at where the shares are trading on a valuation basis. They're much cheaper than they were before this started. As much as the stock has gone up, like the demand for the parts and the impact of the financials has gone up even more. It's been really amazing. We are at the point now where we're seeing like massive amounts of capex from the hyperscale players, which I think is good. I think where people get nervous is on the enterprise side. We are still in the experimentation phase, and this is true. Like enterprises tend to move slower, but I do like the amount of breadth that we are seeing here. There are many enterprises that actually are experimenting here. Nvidia talked about this. I think they talked about like large cloud vendors were only about 40 or 45% of their total revenues there. Their customer base is still broadening out. We are seeing more and more deployments as business models are getting built on the enterprise side. But it does take time. Like the hyperscalers can build up very quickly. The enterprises, take a little longer. And I kind of get that nervousness. But at the same time, everything we're seeing right now, at least in terms of near and medium-term demand, still seems really strong. It doesn't look like we're seeing any signs of slowdowns yet.
Following some recent analyst upgrades, Nvidia stock went higher after pulling back for days. Overall, the stock is up more than 160% year-to-date, and unlucky investors who have thus far avoided shares of the company have missed out on 200% returns over the past year alone. However, these impressive gains, as well as the recent pullback, are leading many investors to wonder if the run is over, or if this is just a pause before the stock's next leg higher. Now, no one has a crystal ball that would allow them to tell the future and answer these questions, but what we do know is that seasoned semiconductors analysts, like Bernstein's Stacy Rasgon, still think Nvidia has more room to grow. That's what we're going to talk about in today's video, and we'll also discuss whether Nvidia stock is a buy or not right now. But before we do that, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
The market cap is $3.15 trillion. And when we did our segment a little while ago on the race to $4 trillion, I think it was Gil Loria made the point, you can't have both Microsoft and Nvidia reach $4 trillion at the same time, because his line was basically, Microsoft can't afford for Nvidia to be that necessary. And if Nvidia is going to be that large, then Microsoft's margins will be destroyed and its profitability will be called into question.
I don't know about destroyed. You have to remember, a lot of the capex that's going on right now is not necessarily all incremental. Like you can go look at sort of spending on traditional data centers, CPUs and traditional servers, networking. They're all in the toilet right now, right? I mean, so there's been a pivoting of spend from more traditional things to GPUs. Some of this GPU capacity as well is fungible. Like these cloud vendors can use it for their existing needs as well. Not all of it is generative AI. Some of it is things like recommendation engines from players like Meta, like other like more traditional, more legacy types of machine learning where there's already a clear return on that.
All right.
And you can sort of run through the math. Like if the returns take a little longer, I mean, it doesn't impact their margins all that much. It's a colleague of mine who covers Microsoft, he did some of this work. It's a few hundred basis points, I think, on margins given the incremental depreciation load. It's not crazy the amount of money that they're spending at this point. It's not like they go down the toilet if this doesn't come down. So no, I kind of disagree. I push back on that a little bit.
In a recent note published by the firm, Bernstein analysts revealed that they remain bullish on the semiconductor industry. The analysts expect that the industry will return to growth this year, and this will be driven by memory recovery, improved PC and smartphone markets, and excitement surrounding AI. Indeed, all of this is 100% correct. For instance, research firm IDC said that the global PC market returned to growth in the first quarter of 2024 after 2 years of decline, and global smartphone shipments increased 7.8% year-on-year in Q1, marking a third consecutive quarter of growth. This shows that the recovery of these markets, after they suffered during the pandemic, is well underway. Also, AI is still in its very early stages. In fact, analysts predict that today's $200 billion AI market may surpass $1 trillion by the end of the decade. Bernstein analyst Stacy Rasgon said before that Nvidia is one of his top AI stocks, and he even said that this stock is the best way to play AI. So, let's get right into why this is the case. Hello everyone, and welcome back to Investocracy.
Top analyst calls from today. Nvidia shares higher on the back of two price target boosts. UBS raising its outlook from 120 to 150, citing demand momentum for the Blackwell chips, while Wolfe Research also raising its price target to 150, calling it one of the best ideas in semis. So UBS, for its part, talks, Julie, about demand momentum for Blackwell rack scale systems, says it's robust. Sentiment, yes, they say it's recently faded on the stock in the last few weeks, creating what they say is more a wall of worry that should be ultimately healthy if our outlook materializes. And then separately, as we know, Wolfe also raised their target to 150, talk about ASPs and improving mix driven by Blackwell.
Now, I'm sort of blown away. I don't know why I'm continually surprised by estimates for NVIDIA, but I still have the capacity to be surprised, apparently. So the consensus calendar 2025 earnings per share estimate for NVIDIA is $3.69, according to Bloomberg estimates. UBS says no, it could be closer to $5 per share because of these channel checks that they're doing. Wolfe puts the number around $4, but $3.69 versus $5, that's a pretty big gap here. And the naysayers with NVIDIA have talked about this slowing growth trajectory all around. There's no way they could keep up this pace of growth. UBS says, well, given what we're seeing when we talk to people who are buying this stuff, there is still high demand. Now, we'll see if that does end up being the case. But it's still, it's just
it's
still
incredible.
Has its capacity to say, wow, $5 versus $3.69.
Well, isn't our friend Corey Johnson, if you tour him, didn't we ask him? And he said in his career, never seen anything like it.
No.
Never seen anything like NVIDIA.
We've thrown around the word unprecedented a lot after the past few years, but it still applies in some cases.
For a very long time, Rasgon has insisted that Nvidia stock is actually cheaper than it looks. But is that true? Well, the investment thesis for Nvidia is pretty straightforward. Tech companies that are building massive data centers to run complex AI models are buying Nvidia chips and prefer them over the company's competitors. So much so that Nvidia's market share in the AI chips market is estimated to be as high as 90%. This is thanks to Nvidia's competitive advantage with its CUDA software, which helps developers easily configure the chips for AI applications. And as a result, Nvidia stock saw unprecedented returns over the past few years. And with the expected growth of the AI industry, as we've discussed earlier, the stock looks cheap now. Sure, its forward PE of 48 might be considered too high, but imagine how much the stock could grow if the company continues to surpass expectations and innovate. While many analysts raise concerns over the competition from firms like AMD and Intel, Nvidia remains the leading provider of GPUs that are used to power advanced AI applications. And as long as it continues its heavy investments in research and development, it'll likely maintain that lead. In fact, in the last quarter, Nvidia spent $2.7 billion on research and development, while its nearest competitor, AMD, spent only $1.7 billion. This shows that even having the #1 spot in the market won't stop Nvidia from outspending its competitors to develop its offerings, and this helps the company maintain its leadership in the market. With all of this in mind, how should investors approach Nvidia stock now? Let's find out. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
NVIDIA did get hit with a downgrade this morning from New Street Research. Analysts at the firm saying they see limited further upside and are downgrading the stock from buy to neutral. Well, Brett, everybody's trying to be a hero on NVIDIA. All I know is I go back to a recent JP Morgan story, and it is report is very simple. Demand continues to outstrip supply for NVIDIA chips. And as long as that continues to happen, there might be some volatility in the name. How do you dump this stock? I mean, they're a beast. They're on a path to potentially $10 trillion market cap.
it's not a stock particularly that's just one that you talk about where it's just, okay, yeah, just trade this name. No, it is an investment decision that has now been regarded as such for a long-term kind of hold type of mindset. It's not something that you're trying to day trade at this juncture, even though it got a little bit more affordable after the stock split that took place in a couple weeks back.
Last thing you want to hear. So you call up your money manager and they tell you, hey, I hope you had a great July 4th. Yeah, I'm going to be lightening the load on Nvidia. Who the hell wants to hear that? I mean, that is the great way to lose your job and lose client money. I mean, it's tough to sell a stock that everybody is rightfully very bearish on for strong fundamental reasons. Yeah. I mean, the AI chip rollout, this is not late 90s .com stuff with companies not making any money. This is real stuff, real technology, and this company continues to be the leader by years. I mean, by years, they're leading other companies.
Well, the concerns surrounding Nvidia stock are somewhat overblown right now. Everyone buying the stock is doing so to get a chance to capitalize on future growth, not on what has already happened. Ultimately, the risk to investors is that Nvidia fails to deliver for whatever reason. And because of how giant Nvidia's leap has been so far, going backward could be especially painful. That doesn't mean investors should avoid the stock entirely. As we've discussed, the stock could still perform well if the company's growth continues. And the company's guidance for the upcoming quarter shows that growth is expected to continue. In fact, for Q2, which concludes at the end of this month, Nvidia is guiding for revenue of roughly $28 billion. If the company were to hit that target, it would mean delivering growth of roughly 107% compared to results in the same period for the previous year. Not only that, but it would also mean delivering sequential quarterly growth of roughly 8% compared to the $26 billion in sales the business posted in the first quarter of the current fiscal year. So, we think that investors shouldn't wait any longer for buying and investing in Nvidia, and for those scanning the horizon for compelling opportunities, analysts shine a spotlight squarely on Nvidia. The company looks prepared with living proof, and only good seems to be coming. But what do you think about Nvidia stock? Is it a buy at the current price? Let us know your thoughts in the comments section, and don't forget to tell us what your valuation for Nvidia is. If you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.